Hello and welcome to Food Systems, a podcast from the Forum for the Future of Agriculture, where we discuss new ideas that can shape a sustainable food system from farm to fork, from policy to consumers, and everything in between. I'm your host, Robert de Graaf, and you can find us on Twitter at Forum for Ag. These episodes will be available every other week on all major podcast platforms. Before we get started, we'd like to say a quick thank you to the FFA founding partners, the European Landowners Organization and Syngenta, as well as the FFA strategic partners, Cargill, the Nature Conservancy, Rabobank, Thought for Food, and the World Wildlife Fund. Please enjoy this episode. Welcome back to the 5th episode of Food Systems. Today we're talking to Alexander El Alaoui, an independent advisor in sustainable investment. He's also a senior advisor for impact investing at the F20 network, the investment lead at Cooler Future, and also the vice chair of the Arts and Nature Social Club, a varied and rich history in sustainable investing. And certainly it's very timely. The German government has just launched a 10 billion euro green bond for infrastructure and research. Exxon has been kicked out of the Dow index. China is launching its own cap and trade system this year. And post-corona and the financial crisis, the world is flooded with more money than we thought possible in the last 20 years. So what better time to talk about sustainable investment than with Alexander? Alexander, hello.
Hello. Thank you for having me, Robert.
Thank you for coming. As a brief introduction, can you explain to our audience what is sustainable finance? How do you see it?
I mean, frankly, sustainable finance can mean everything and nothing. It has been around for, I guess, more than 20 years now in Europe. And obviously it had lived through different fluctuations when it comes to the definition. For me personally, I would frame sustainable investment as an attempt. To generate returns the same way we did over the past 50 years in financial theory, while at the same time not harming the environment, society's global wealth and these issues. And ideally, and this has been a new discussion, a new trend, if you will, ideally you want to create positive impact on the world at the same time. But I mean, as I said, the debate has been quite vivid and fluctuated a little bit over the past 20 years. But generally speaking, it has remained the same. You want to link finance with the good, to put it in a nutshell.
Okay. I think that's a good starting point. I think you and I could spend a very long time delving deeply into it. But let's take a more practical side. With your experience, how would you shape an investment fund, a sustainable investment fund?
You know, to cite Simon Sinek, whom you might know, the question, you always should start with why. What do you want to achieve with your money? What specific purpose does the money that you invest serve? Do you want to sort of maximize returns? Do you want to maximize impact? Do you have a certain sort of ecological goal that you want to achieve? Do you look more at social issues? Do you prefer thematic investing? Do you want to be exposed to new industries, to new sectors, to new countries, to new trends? Or do you rather, want to reshape existing business models? So start with why, and then go over to what, and then you set up a fund. It's quite easy. So basically, let's say you want to stay invested in the old world, be exposed to large cap companies, globally diversified. You would start with an investment universe, for example, the MSCI World, which basically captures the global economic system, to put it crudely in a sense. And then you basically would include atop of this universe a sustainability filter, which is basically designed to match your specific sustainability profile. So let's say, for example, you want to focus on the climate goals, on Paris alignment. So then in that case, you would include a CO2 footprint filter atop of that universe, something like this. So start with why would be the easiest way to tackle your question.
Okay, at least in my understanding, there is a balance that you can make, that you can say, well, I can do this sort of tracker fund overlaid with climate goals, but maybe that doesn't earn me quite as much money as I could in, let's say, in the next 6 months by investing in oil and gas or the arms industry or another industry that, broadly speaking, we would say is not in alignment with environmental and social goals. So is there always a trade-off between higher returns and in unsustainable trading? Or do you have to accept a slightly lower return if you want to be more ethical? In other words, does being ethical cost you money?
I mean, I guess this has been one of the most contested questions and debates over the past 20 years or so. The general answer would be no. You don't have to sacrifice on returns when investing sustainably. There has been one meta study published by the University of Hamburg. I think that was 2 years ago. And what they did was to basically look at a variety of, I think in total it was 2,000 studies published globally who looked at the correlation between return and sustainability. And what they found is either it has no impact at all, so basically it's neutral. You would say you would earn or lose the same money with sustainable investment than with non-sustainable investment, or there has actually been a slight sort of a slightly stronger positive correlation saying that you actually earn more money when investing sustainably. And the reason for that is actually quite simple. As indicated in the example before, what you usually do with sustainable investing is that you minimize your universe that you're exposed to. And whenever you minimize sort of the investing universe, the single bets that you're making with each investment is getting larger, right? So the chances for you to outperform a traditional or non-sustainable portfolio is actually positive. The chances are increasing. So that would be the easiest or most straightforward answer to say, if there is any correlation, it surely is positive. If you look at the opposite example, I mean, there had been various cases over the past 3 years which showed that when you invest non-sustainably, the chances of you to lose money actually increase. When you look at the oil industry, obviously also during Corona due to the oil price shock and these type of things. If you look at the coal industry, if you look at single companies that had been exposed to, reputational risks like Volkswagen, for example, those examples would show you that investing non-sustainably actually minimizes the returns. Again, as a disclaimer, this is more of a general observation. Of course, there is, pros and cons and different developments to both sides. But as a general observation, the correlation is actually trending positive.
There's also another sort of stream of thought that says, in general, what we have experienced over the last 30, 40 years is a shift into profit maximization, return for shareholders in particular. And that has not given us, in terms of sustainability, has not given us positive results. If you saw that in the 1980s, that was when the big first climate change warnings came out, and essentially the stock market didn't really care about that fundamentally. Is there not a sort of certain irony in trusting that the very systems of fast moving money and capitalism that some would argue have delivered us into a lot of the current catastrophes are now expected to save us?
So in a sense, what you're asking is the right life in the wrong one? Or can you sort of use capitalism to save capitalism in a sense? I guess my answer would be yes. First of all, there's a variety of capitalism, or variety of capitalist system. So capitalism as such or per se doesn't exist. There's a whole literature on that, which is super interesting. So basically, Norway and the United States are both capitalist systems, but they differ quite substantially, I would argue. And then secondly, I think one of the key findings of the literature was also to say that capitalism as such is neutral. it isn't good or bad, it's neutral. And what these activist investors have tried to do is basically use the systems of capitalism, or the mechanics, but basically reverse them to fit their goals. I can give you one example from my own past work. A couple of years back, I had been involved in a legal case. We set up one of the first climate litigation cases in the world. We supported a Peruvian farmer who was suing RWE, which is, I guess, Europe's largest utility company, on the grounds of climate change, arguing that this company has actually negatively impacted his livelihood, his surrounding, his home, due to the climate damages that emissions created. So he put this case, with our help, in front of a German court. And when the court actually accepted that case, and it was the first time in legal history actually, that same day, the share price of RWE, went down 2%. That was equal to a couple of €100 million market capitalization. So in a sense, what this example showed is that, it was a case of well, not of investor engagement, but of activism, using the legal system and the capitalist system to bring about change. But that being said, though, I don't want to be too naive. I mean, there's a lot of talk of engagement and investor activism and proxy voting and those type of things, and at the same time, there hadn't been much business cases that changed fundamentally only due to investor engagement. So yes, it's one sort of item of action you can trigger, but certainly not alone. And I guess for the capitalist system to change in a way that it actually supports the climate goals or the sustainability agenda, that goes a long way.
Okay, I wanted to turn now to the topic of this podcast, the food system. If I asked you how to create an investment fund that would sort of focus on getting nice returns, but also boosting sustainability in the food system, how would you go about building something, or what would your sort of prime targets for investments be today or in the next 12 months?
Generally speaking, I guess sustainability, and the same is here true for the food system, is a function of asset class, right? So I would ask the investor what type of company that he or she wants to invest in. So turn it to the food system. I was involved in an interesting project in Tanzania, a farming project where basically people try to use solar panels and the shadow that those solar panels provide to basically cultivate certain crops that are shadow sensitive. Fantastic idea, right? So that would have been a direct investment. So we here talking more about private equity, venture capital. If you're now talking about an investment fund that anyone basically can access, a so-called UCITS investing fund. So we're talking about liquid asset classes, multi-asset, global equity, global bonds. Obviously here you would be looking at a different type of company. So to answer your question, I would ask, or actually ask back, is it that you want to reshape an established industry, global players in the food system? So then I would basically build a monothematic fund around these companies. I don't want to name names, but let's say the big ones in the food industry, and then use sort of my voting rights or the voting rights of the investors to basically leverage change. If, however, my or the investors' goal was to basically, support local industries, support new farming models. For example, I've been involved in various projects, looking at vertical farming and indoor farming. Here you have also very, very interesting opportunities. However, the fund sort of vehicle would be different. So there wouldn't be a one-size-fits-all strategy or fund vehicle. It really much depends on the asset class, on the type of company, on the type of ownership that you want to basically also establish. And to your wishes, again, start with why. If your goal is to turn global supply chains regional, I guess I would be looking rather at these more innovative business models and build a fund around them. There are actually a couple of interesting venture capitalist funds, VC funds, looking monothematically on the food industry. Actually, there's a new fund currently being created here in Europe as well, looking at precisely these new ventures and ideas and business models.
Okay, so let's try to sort of flesh that out a little bit. As you say, you need to pick an industry or a corner of the food system to focus on, because you cannot just spread your money thinly everywhere, because then you don't create the impact that you need. So if you were investing your own money, where in the next, maybe not even 12 months, let's say 5 years, where do you see in the food system, where do you see the most opportunity for investment returns and sustainability? Is it waste reduction? Is it creating energy on farms? Is it more sustainable consumer behavior? Where would you put your money?
I met this very interesting entrepreneur last week at one of the largest institutional investor conferences here in Germany. And he basically asked me the question, why should you buy apples that had been shipped from Australia? Or like the same way, why would you buy salmons that have basically been produced, in a sense, in Chile? And what he proposed and what he's actually currently doing is a project or a company where he basically, turns the global supply chain region, as I said, and he is now producing salmon just outside the doors of Berlin, which is, well, counterintuitive, right? I mean, if you think about salmons, you think about Alaska and Norway and these regions in Chile.
No, you don't think about the German plains when you think about salmon.
You usually don't think about that, but it's possible, in these big tanks, and if you create the right flow of water, these salmons actually produce mussels, and they have a way sort of lighter share of fat in their bodies. So all these positive characteristics. And, linking that with the nexus, or basically sort of bridging that to where the consumers are in urban areas such as Berlin. They want to eat these things. In particular, salmon has been one of the, over-demanded food products, but they want to use it also, or they want to eat it also, with the knowledge that it hasn't been basically shipped over the globe. And so, but what he basically has been then proposing to this investor conference was to say, here's an idea, invest into that. Let's not talk about the vehicle, but the idea is actually quite straightforward, I thought.
Okay. That's. I think we're all going to get into big salmon then in the next couple of years.
Why not?
Let's turn to what the EU is currently doing. So the EU is currently working on a sustainable finance agenda, which is a policy response to a number of the things that we've just been talking about. And I think it's too big an agenda to fully go through all the items, but one that piqued my interest was this idea of a taxonomy of investment, by which they mean to say they will give preference and easier regulatory approval to investments that are categorized as green or sustainable, and investments that are lower on that list, let's say, building a new coal-fired power station, would be much lower on that taxonomy. Does something like that make sense to you?
Absolutely. First of all, the EU with this plan is the largest economic region in the world to put forward such an idea. And it basically is a reaction to one of the biggest problems in sustainable investing is terminology. You have all these different acronyms, sustainability, ESG, pure I, impact, carbon, Paris aligned, temperature aligned, all these type of things. And frankly speaking, there's a lot of greenwashing in the market. So basically virtually every asset manager now says, they have ESG and sustainability sort of in their DNA and all that. And what the EU is doing is basically proposing a taxonomy, which is a different word for harmonization of terminology, And what the EU tries to do with that, or tries to achieve, is to basically define what means green. This is actually a very, very difficult proposition. If you look at ESG funds, and we talked in the beginning about, how would I set up such a fund? What becomes critical is to understand that ESG is recategorizing existing assets.
Sorry. Just for our listeners, by ESG, you mean environmental, social, and governance investing, right?
Absolutely. Sorry. Yes. So basically, for me, I use sustainability and ESG interchangeably in a sense. But so what you're usually doing is sustainable investing or ESG investing is recategorizing existing assets. So you take, an existing universe and you recategorize it. You narrow it down and you recategorize it, but you don't change necessarily the assets behind. And I think what the European Union is trying to do is actually tackling this challenge by first defining what's green and what's not, and then secondly also incentivizing not only the creation of green assets, but then also sort of the refunneling of global capital. And by the way, the Paris Agreement actually demands that. The Paris Agreement Article 2.1 reads that we have to shift away global capital flows from brown sort of assets to green assets in a magnitude of $17 trillion. So this is actually an excellent sort of regulatory proposal. It has to be fleshed out. There had been lots of contestation around is it enough? Is it over-regulated? Is this, too much of soft regulation? So obviously, opinions change or differ. But generally speaking, I think that's a fantastic approach.
I think that is certainly very interesting and something that we have to keep a close eye on as this agenda develops. We're coming up on the end of the podcast, and something that we do for every episode is that we ask everybody who comes on to give us, in very short answer, your one solution to a more sustainable food system. And I'm going to ask you the same question. What would your one answer from this world of finance for a more sustainable food system be?
To turn to consumers. It sounds simple and naive, but really to turn to consumers and actually react to their demands. I think, urban consumers, they want to have the same access to food and to globally produced food as every generation before, but they want to do this with a clear understanding that that doesn't come at the cost of, the health of the planet. So the example I provided before would actually be one that I would use to answer this question, to say, turn global supply chains regional where it is applicable. I guess it's a hard challenge, but there are things that have proven, successful. So yes, turn an open ear to the end consumer. As simple as it sounds.
That sounds simple, but as always, these things contain multitudes. Alexander El Alaoui, independent advisor in sustainable investment. Thank you very much for joining Food Systems today.
Thank you very much, Robert.
You've been listening to an episode of Food Systems, a podcast brought to you by the Forum for the Future of Agriculture. Look for us in 2 weeks when we release our new episode. And in the meantime, please don't forget to subscribe on your podcast app, as well as on Twitter, @ForumFag, for updates on this podcast, news, as well as FFA events. Please check out our website, www.forumforagriculture.com, for more great content. Thank you for listening and enjoy your day.